And new numbers today, consumer confidence, and while the reading for the month of June was slightly above expectations, it was down from the month before. Doug Flynn, co-founder of Flynn Zito on the Money News Today. Do you have one of those Stanley water bottles or no? Or
No,
not into those?
no.
Oh, no, you're just...
But I have held the Stanley Cup, actually, gotten close to it.
Oh, excuse me, so. Really? Really?
Yes.
Was that
at one of the viewing parties, so that was good.
Only the big timers get in for that. Very nice. The consumer, talk to us about the economy and kind of where things are right now with the American consumer.
Yeah, I mean, the confidence index dropped again in June, but even more importantly there's something that they run that's also called the expectation index, and that gives you an idea of like the short-term consumer look at income, business, and like their job picture. And that actually went down a pretty good amount, and for 5 months in a row now that's been pretty negative, and typically that means that you could be leaning towards a recession. And so that's what that usually shows, but really the job market is still holding everything up. And so once that begins to wane a little bit, that's where the Fed can finally step in. That's what we keep talking about. But that's really holding everything up. Everything else is not doing as well as it had been before. The economy has definitely slowed. Okay, so to your point about the Fed, I have the two issues that I want to talk to you about for just regular people investing in what they're going to do with their money. One was in the Wall Street Journal this morning, so I'll put up the headline. It says Americans chasing the high interest rates risk falling into what they describe as a cash trap. Americans have poured money into cash-like investments since the Fed began raising interest rates, driving assets in money market funds to a record $6 trillion earlier this month. So now the question is, you get a lot of people, in their savings, older people, not all older people, just people in general, they said, well, you know what, I'm making 5% or whatever it is now in my money. That's pretty good. But yeah, obviously, Doug, that's not going to last forever. The Fed at some point will start cutting rates. So what should people be thinking about now for their own investing future? Yeah, the problem with the cash trap, and it definitely is a cash trap. I've been doing this for a while and have seen this a couple of times before. When rates begin to come down, what happens is people do flood to the money market because 5% sounds great and it's hovering around there for a while. The issue is if it's true that the Fed eventually does lower rates, and let's just say that they're 1% lower than they are now a year from now. And that's what these studies show, is that people will leave them in and around there. But once you see it dip below 4%, they might want to do something differently. The problem is if money market rates drop from 5 to 4% or get into the threes, the yields on short-term bonds, which right now are about the same as money markets, you get appreciation on bonds. So if rates drop 1%, short-term bonds are going to end up with a total return of over 7%. And intermediate-term bonds will end up with a return of over 10%. And so while you're dipping your yield from 5 to 4 into the threes, you could be missing out on that appreciation on the bond side. And we're not even talking about stocks. We're just simply talking about the opportunity of moving from money markets where it feels good, the yields are good, but if yields are indeed lower a year from now, you're going to wish you had moved some of that into something just a little bit farther out so that you could take advantage of that appreciation as rates drop.
And it's a pretty good bet that the rates, it's something we don't know the exact timing, but that's the next direction. So if you know that now, you start to get ahead of it and start thinking about that now. I said there were two issues. The second one has to do with 401k plans, but here's the tease. Let's talk about that when you're on tomorrow, just for time, if that's all right, because that's very, very interesting for people saving, and we'll give it more time tomorrow. We'll see you then, Doug, okay?
Sure.
Doug Flynn, now.